Joining us now to talk more about companies moving retired workers to privately run insurance exchanges is John Grosso. He's a consultant and the head of the Retiree Health Task Force at Aon Hewitt. Mr. Grosso, welcome. Good to have you with us. Let me ask a couple of quick questions here. These exchanges will be used for individuals to buy Medicare Advantage and supplemental Medicare policies. Am I right on that, basically?
That's correct. It's individual Medicare Advantage, it's Medigap, and individual Part D coverage, correct.
And forgive me for being dense about this, John, but what happens here? If I'm a retiree from Time Warner, where I did actually used to work, what are they going to do? Are they going to give me money to go out and then shop on this exchange and compare plans? How's it going to work?
That's right. Most companies will give retirees a premium subsidy, a tax-effective premium subsidy in a health reimbursement account. They'll partner with a private exchange player and give retirees guided access to the individual market to help them find plans in their own zip code that will help meet their needs and provide licensed benefit center agents that will actually work with them to find the right plan for them.
You know, John, it sounds pretty much like a win-win short term anyway, from what you're describing. More choices, the ability to shop around, therefore price comparisons. But what are the cons? What are some of the negatives that might be looming out there?
Sure. There are some challenges to consider. And I think first and foremost, it's important to understand how the employer has chosen to subsidize the program, because it's very likely that the employer subsidy won't necessarily keep up with healthcare inflation longer term, which will result in a cost shift to retirees, meaning more out of pocket down the road for the retiree than otherwise. So there are some challenges there. In general, I think it puts more responsibility on retirees to understand the healthcare market, make those healthcare dollars stretch longer, plan for the future in a way that they may not have had to think about in the past. And then finally, the individual market is very local. There are hundreds and hundreds of plans out there, so much choice for retirees to really understand. There won't be one national plan design or premium for the entire group to pick from anymore. They really have to figure out what's right for them at a local level.
So in the longer run, John, as you just described it, I can see where this is a great thing for the companies. They can say, we're going to give you, I don't know, pick a number, $2,000 a year to pay for these Medicare supplement, Medigap policies, or what have you. And they can raise that number very slowly or not at all, even as the premiums for those policies go up. So it sounds to me like it's a good thing in the long run for the company, but a very much less good thing for the retiree who wants those benefits.
Well, it may be. I mean, without question, the plan sponsors have complete flexibility to determine each year how their premium subsidies will grow relative to the past. So that gives them more control. This is pure defined contribution healthcare for retirees. But that said, there are many more choices for retirees to pick from. If they have limited choices in the group plan today and their subsidies are capped today, this could actually be a good thing because it gives them more options to stretch those dollars longer. But there are some downsides for retirees to navigate going forward, certainly.
John, you mentioned the fact that there's really no national plan. If indeed on the local level these types of exchanges prove to be successful, do you anticipate, though, that the discussion will really take on some serious nature of a national plan?
Well, that's interesting. I mean, the Medicare Advantage plans are local. They're county specific, so you have a very disparate footprint nationally. You don't have national players in all markets. Same generally goes for the individual Part D programs, the Medicare prescription drug program, and Medigap is very state-specific. So you're going to have a patchwork, a quilt of plans out there for the foreseeable future that retirees are going to have to navigate on a county-by-county basis.
All right, John, thank you very much for explaining it to us. It's complicated. We appreciate your help. John Grosso, consultant with Aon Hewitt.